Hello and welcome everyone for another weekly market commentary with myself, Philipp, and our Chief Investment Officer, Freddy Lim.
Hi.
Eventful start of the week already. We'll get into that here in a second, but I wanted to remind everyone before we get started that if you have any questions whatsoever, if you're listening to it today, over the weekend, please feel free to ask them here in the comment section below the video, and we'll make sure to answer them next week, or one of our support team will reach out as well. With that being said, we have some really exciting events actually coming up in Singapore over the next few weeks. On the 21st of May, we're doing our first ever financial planning for women events. It's on the 21st of May, and it's together actually with some folks from the Singapore Stock Exchange, from SGX, from Spider, as well as from Nico. So I think should be a really interesting discussion for financial planning for women. A week later, on the 29th of May, we actually have a personal finance panel, and we did that. We're going to do that together with the folks from Seedly, one of the personal finance apps here in Singapore, as well as Dollars and Cents. So that should be also really interesting for the folks in Singapore. For Malaysia, just to wrap it up, we have a couple of events going on next week. On the 15th of May at lunchtime, we're going to actually do a joint event with Money Match on financial planning basics. And the day after, we actually have our Investing Basics seminar at our office, actually, in our WeWork office in Malaysia. So if you want to find out more about either of them, please go to StashAway.sg or .my for Malaysia /academy. And you can find out more there. You can sign up for them or send us an email to support@stashaway.com. Either way works, and we're looking forward to having as many of you as possible at those events. So Freddy, that's events. Lots to talk about actually, right? It started Sunday when Donald Trump woke up in the White House and felt maybe grumpy or something, or bored. But nonetheless, he tweeted something about the trade war that you can maybe tell our listeners, and kind of what the repercussions been so far this week.
Right. Well, as you said, on Sunday, he tweeted twice about doubling, actually raising the 10% tariff rate on existing goods to 25%, and he's also open to slapping on all goods eventually if by Friday this week the Chinese and US could not agree on the deal. The story behind the scene was the trade czar from the US, Robert Lighthizer, complained to Trump that the Chinese, in the very last moment of negotiations, were trying to step back on some of the stuff that they have thought they agreed to. In particular, about enforcement, some of the stuff about intellectual property rights, where the US demand Chinese have some sort of enforcement mechanism, but it involves changing some laws in China to comply with the trade deal. That actually fell apart last moment when the Chinese sort of stepped back on it. So an angered Lighthizer complained to Trump. The lack of process angered Trump, and Trump upped the ante into the trade negotiations. That was essentially the backstory.
Yeah, and kind of the outcome. I don't know, if you've been following the markets or not, but this has the markets kind of scrambling right now because they don't really know where this is going to be heading to, right? Especially because the deadline came like, oh, it's on Friday.
Well, I must say there's two things. There's two observations I can make here. First, it does have an impact on markets, but the reaction in China is 4 or 5 times more than in the US. And in fact, if you look at the S&P 500, it's held up pretty well. The China A50 actually has dropped a lot more than the US equivalent. Having said that, on the US alone, it seems to be a lot more resilient than last year, when we've been through the same issue, but the reaction on the US side is just way less than before. It's sort of like traders were getting used to this sort of news flow, and they are still cautiously optimistic that this might just be an art of the deal.
Yes, and I think this is, for the US and especially the case, right? Americans are like now kind of getting used to his antics, especially in the financial side, right? They've been dealing with it now for 2.5 years, right?
It's like in the last moment of a deal, you suddenly up your ante ridiculously, and hopefully you bring it down to somewhere even way better than before as you go into the end negotiation.
Yeah.
So that's the art of the deal sort of mentality is probably part of this whole game as well. But it's true that there are frustrations from the US side on the lack of progress in the last few weeks from China. So I would say that there's an element of truth there. We need to be cautious. We don't have to be pessimistic, but we can be cautiously optimistic.
And I think one of the good signs also with that is actually, the Chinese vice premier still coming to the US tomorrow, right? Yes. Or today, actually, he's arriving today, right? So I think that already says that China knows they have to. They still, it's not.
They have no choice. They have to negotiate. The Vice Premier Liu was saying now, I'm considering to cancel my trip to US now. Market dropped.
Half a day later, it was.
And half a day later, it's going anyway. And so, this sort of anti and flip and flops has been very common, and traders have seen it a lot in 2018.
Yeah.
So that's why maybe the reactions were relatively muted.
Yeah.
So volatility is going to be there. It pays to have a diversified, global and balanced portfolio, right? And stick to your plans. And as we always said, those things comes first, regardless of what happens to the trade deal, right? Or the economy.
Yeah, and I think the numbers that you were just mentioning, some of the economic numbers, right? And I think Trump also did this on the heel of one of the biggest jobs reports ever, right? On Friday, which Friday the stocks rallied crazy, right? Maybe you can shed some light on that, the number that came out on Friday, and get people to acknowledge, the economics, not just those news-driven things like the tweet and blah, 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 right? I think that's very important.
Right. Well, put it this way. The U.S. latest non-farm payroll, meaning the added jobs by 263,000 in a week, and bringing unemployment down to 3.6%. That's the lowest ever since January 1970.
Yeah.
Things are still very strong in the U.S. economy, regardless of what the news flow has been telling you since 2008. Leading indices in the U.S. has also stabilized and started to re-improve. Yeah. And even the Chinese numbers, they were poor throughout 2018, but the Caixin PMI leading indicators in China, including the Li Keqiang index and so on, the more forward-looking, more accurate indicators were sort of showing a stabilization in Chinese numbers. So there are green shoots sprouting out around the world, and the US is still doing strong. So obviously we should focus on that too, not just the trade war.
Yeah, no, I think that kind of gives a little bit more insights onto, if you're watching the news and you hear things, to not always just take it with a grain of salt and think about it a little bit more in depth. Same thing in the week, to take it a little bit more local into Southeast Asia and this region. A lot of central banks are going to have some talks on this week on some things on monetary policy. Maybe you can shed some light on that as well for the local people.
Whether it's Australia, New Zealand, Thailand, Malaysia, Philippines or not, there's a common theme here in the region, which is that these economies have slowed. Yeah. And the inflations are still low, so which leaves the door open for them to respond by cutting rates. Yeah. But then if you look at in terms of the room for them to maneuver, obviously countries like Malaysia, Philippines have higher interest rates. Yeah. They can afford to be more flexible in fine-tuning their rate level. There's more room to stimulate. Whereas in the case of Thailand, in Australia and New Zealand, they're lower yield by now relatively, so they have less room to maneuver. Having said that, it's likely that RBNZ has already cut first. For Australia, may take more time, because in the case of Australia, actually unemployment has been quite resilient. They can actually afford to wait and see a bit more. So overall, the team is the same, that they have room to cut, but some economies can react now. Some economies actually should delay and just observe further, but the team is the same. They are less strong than the US, they're less strong than even the Chinese numbers, and the central banks here may actually cut rates. Yeah,
so there might be in the next couple of months some movement on that.
Which from a currency angle makes the region possibly likely to see weakening currencies relative to the US. US is on hold, as we know. Yeah. The Fed's been vindicated in the sense that the numbers are good. Donald Trump asked them to fuel the market, but the numbers are actually good. Being on hold is the right answer here. But in the region here, we have countries attempting or needing to cut rates. So from a currency perspective, you need to have sufficient amount of your portfolio dedicated to some UX exposure. That sort of improve your reward to risk ratio over time.
And that's a very important thing, especially for the global investors, right? So thank you, Freddy. I think that's a lot of, a lot of noise in the market right now, especially the beginning of the week. So let's take it back for, some valuable lessons. I think we talked about it all throughout last year, right? We had 2 corrections. They all kind of come with this noise about trade war, blah, 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 kept coming, right? Maybe you can share something with our listeners about, maybe setting the right risk level of your portfolio, because that's important, right? To stay the course, because your goals. And then, just in general, that we always, not just in the good times, like the beginning of the year, but also in times with more volatility or down market, you want to don't market time, right?
Yeah, it's a great point. At StashAway, our framework is risk focused first, then we maximize return for every dollar of risk you take. Now, risk focused meaning, let's think, is a trade war as big a tsunami as 2008? No. But the StashAway framework models after crises such as 2008. If you select a risk level on our platform and say it's 20%, it means that if 2008 happens again, that is sort of the risk you're taking in that scenario. The trade war is nowhere near as big a deal as 2008's global financial crisis. That's of an unprecedented scale. So our platform has already conservatively budgeted risk along those lines. As long as you stay with the selected risk that's compatible with your preference, your tolerance, your personal background, you should stick to your investment plan.
Yeah.
Because when the markets are temporarily down, your contribution buy you more units.
Yeah.
When the market's up, you actually get less number of units. So you need to stick to your plan regardless of whether the markets today is down a lot or whether it's doing really well. You should never suffer from the fight or flight response when the market is down. You should never also suffer from FOMO, the fear of missing out when the market's up. You should just average out the noise in your investment plan. Stick to it.
Yeah, and that's a good thing to wrap it up, right? Set a goal, make sure you know what the goal is, know how much you need to save every month for it, stick with that throughout any point in time, right? And know the right risk level. So, and if you want to do a little test, like if you're feel jittery or like you're checking your app too many times or you log into your brokerage account way too many times when there's volatility, then you probably have the wrong risk level, right? So just readjust it. Make it sure that you don't have that.
It's easy to adjust on a platform like
Very
ours
easy.
or even any other platforms. Make sure you review it yourself and feel if you are feisty, you're nervous about something, it means something has not been set right in your plan. Review it now. This is a good time.
Yeah. Again, thank you so much, Freddy, for your time. Appreciate it. I hope the listeners appreciated it as well today. Again, if you have any questions, feel free to leave them in the comments or email us at support@stashaway.com. We're looking forward to hearing from you, and we'll see you next week. Have a great day.
Ciao.
Bye.